So hello everyone. This is the first Mobile Monday for me, so I actually don't really know what you have on your mind, honestly. So Thomas told me that we want to listen to insights on venture capital, and I've spent a couple of years as a venture capitalist, so I hope I'll just share some of my thoughts and views about those years. And as a topic in an audience like this, I thought maybe we could start to talk about a good company. What is a good company? Because that's actually where it all starts. If you have a wonderful company with great people and superb business models and profitable and crazy, you'll get as much venture capital as you want, you know. So we'll talk a little bit about what a good company actually is. And then we'll talk a little bit about how to finance your company. Because venture capital is only one out of quite many ways to finance your company. And finally, if you get investors into your company, I'll talk a little bit about how to be successful with investors in your company. But much more importantly, I want you to raise your hand and ask questions or tell me where I'm wrong. I noticed that Morton will talk about real venture capital afterwards, so that's going to be probably the facet of the whole event today. So let's start somewhere. I spent some 25 years in American IT and communication companies to start with. And after having done all of that, I thought I'll do something else. And I ended up in venture capital. I ran into Ulf Junströmer in 1999. And you probably know Ulf. He's Mr. kind of IT of Sweden or something like that. And he said that isn't it crazy to see all those venture capital firms that pops up in Sweden all of a sudden? I think we had 200 or so coming up in 3 years. And we kind of share that yes, that's crazy. But it's also interesting that venture capital has come to Sweden. So we said, why don't try it our own way with a much more industrial approach? And whether that is successful or not is out for the jury to decide, because I'm actually not with them any longer. But I think still that the ideas behind Brainhunt was actually quite good, because we had no idea about the rules and the tricks of financing when we started. We were able to get that knowledge from elsewhere as we developed the company. But what we shared, at least in our company, was experience on how to fire and hire people and how to build things and how, launch 3 countries. You don't do that in 3 quarters and things like that. We have been there ourselves. So I think we brought some reality to the whole thing. And probably what I'm going to tell you today will reflect that, because I'm a quite basic person. It helps you, because you don't need so much feet on the ground, or you don't need so much resources if you're able to work with partners. If somebody else is already calling the customers, you don't have to go there yourself, and so forth. So I think with those 5, if you deal quite okay with people, problem, product, promotion, and partners, you have likelihood to have a good company is at least decent. But still, I mean, there are billions of things that can go wrong anyway. So when you have that company, then the next question is, how do we get the money into the company? And being from Småland, I think it's an obvious answer. What is the best financing? That's self-financing. It's very easy. If your customers buy your products and you can live on that, you're no slave to anyone. And also in Sweden we say, something like the one who has get it all, or something like that. Den som har bara givet. Banks always give money to people who have money. They don't give people to people who don't have money. VCs prefer to give or loan or invest money in companies who make money rather than people who lose money. And so, the more of your own esteem you can get from your own business, the better. But in many cases, you have to invest a lot in let's say, R&D or something, and then you need money. And I would still say, even if I've been working as a venture capitalist myself, as an entrepreneur, VC money is probably the last way you should go. Because it's actually very expensive, but primarily very dangerous. And when I'm saying dangerous, it's not that they are bad. They are very, very good professionals in the industry, and they do exactly what they should do. But the way it works is that when you have sold your company, we're getting into that, so when you have sold your story to a VC, then you get into execution. And then it's up to you to deliver on your promises. And as long as you do, their plan's going to work out nicely, so they are very happy. As soon as you start to deviate from your plans in the wrong direction, which is the most normal, unfortunately, then you get into problems. And it's not that these people are nasty people or anything like that. It's because the way their business works. Then they will, when numbers are coming in, poor numbers, and you need more money, well, then they obviously have to ask themselves, what are we doing? And if we take bigger risk, well, shouldn't we ask for more of the company and all those kind of things? So, I mean, dangerous in the case, in the sense that if you don't deliver on your promises, you will lose control of your company. And you'll probably come across all aspects of down roads and those kind of issues, where in the newspapers they write that entrepreneurs are squeezed and so forth, you know. But that is actually not the case. It's actually that the VCs themselves or investors will have to take control of the company. So I think unless you really need VC money, you shouldn't go there. That's my point. Back in 2000, it was more like asking for money by the church or something. Well, we got $2 million from a VC. You know, that was the notion among entrepreneurs very much in those days, which is not the case any longer. But there's no free rides or no gifts here at all. And I come back to how I think you should manage that, because I think VCs play a very important role in our industry and other industries as well. So how do you succeed with investors now if you're going to get them? First of all, it's only about sales, delivery, and then, bingo. You first sell your company to the investors, and sales doesn't mean that you cheat or overdo, and you sell them successfully so that they want to invest their money in your company. That's the sales part of it. And then the execution or delivery part is what I just referred to. You just have to then meet your milestones and deliver on these expectations you already created. And otherwise, you will have a big problem. People who do that, and even if the company fails, I bet my left arm that those VCs will invest in you again. Because that's what you have to. You have to people who know what they're doing, who are able to sell their company, and who can deliver on their promises. Then if the market turns somewhere else, that's beyond what a normal entrepreneur actually can manage themselves. So even a failure, if you do it this way, will be a success for you as an entrepreneur. Because you will be welcome back, I'm sure. So, how do you sell your company? Well, first of all, you have to remember that VCs or investors, that's only risk-reward issues. The bigger risks, bigger rewards. If we concentrate on VCs specifically, they are only there for big rewards. The money is very expensive, and they are only there for kind of, you talk about 10 times, 3 times, 4 times in 3 years, and those kind of things. You want really fast development into something that's really, really big and will be worth a lot of money. And all the VCs have different views on this, and different formula and different profile, but more or less it's true across the line. And the reason is that quite many of startups, they never end up in anything decent. So you have to have a couple of very good investments in order to pay for those who didn't work out well. So if you want to go to one of those guys and ask them to invest in your company, obviously, and specifically since all of them say we invest in people, you and your team will have to create and build a lot of trust. They must feel like, gee, this is good people. They know what they talk about. They're trustworthy. They work hard. They're here with their heart and the brain. They know what they're dealing with. It's a serious thing. Everything that gains trust or builds trust is very important.